It is a great pleasure for me to welcome you all to this interactive meeting of the Senate Joint Committee on Banking, Insurance and Other Financial Institutions, ICT and Cybercrime, and Capital Market with key regulatory institutions and other relevant stakeholders. You may recall that the Senate, at the sitting on Thursday, 11 February 2021, spent reasonable time on a motion on CBN's decision to stop financial institutions from transacting in cryptocurrencies and matters arising therefrom. At the end of the debate, the Senate mandated the Joint Committee on Banking, Insurance and Other Financial Institutions, ICT and Cybercrime, and Capital Market to invite the Central Bank of Nigeria, Securities and Exchange Commission SEC, and other stakeholders to brief the committees on the opportunities and threats of cryptocurrency on the nation's economy and security. This joint committee is on a fact-finding mission. It has no preemptive recommendations or stand regarding the entire matter except after thoroughly analyzing the submission of all stakeholders. We shall look at the case of those engaged in cryptocurrency transactions and their contention that is in line with global financial trend and best practices. We shall also look at the position of the central bank that cryptocurrency transaction is a high risk and it is a convenient avenue for money laundering to support terrorism and insurgency. CBN is uncomfortable with the unregulated and secret nature of the cryptocurrency transactions and fears that it will damage Nigeria's heavily challenged economy if not checked. The Senate will always support the legitimate drive of our people, especially the youth toward economic empowerment. We support innovation and the effective use of information technology for economic empowerment. At the same time, we are conscious of the damage unregulated financial transactions have done to national economies. We must therefore find the most effective way to protect our economy and promote our people's drive to benefit from financial opportunities through technology. This interactive meeting will provide an opportunity for all stakeholders to air their views on the issues in contention. The interaction will help to shed more light on cryptocurrency, its mode of operation, links to our banking and financial system, as well as threats to our national security due to its secret and unregulated nature. It is my sincere hope that this meeting will not only help to clarify issues, it will forge a national consensus on cryptocurrency. I wish us fruitful deliberation. Thank you very much.
Thank you so much, Mr. Chairman, for giving us the opportunity to make these brief remarks, which is just a prelude into the main discussions for today at this sitting. I'd like to first remind everyone that cryptocurrency, which is the main thrust of our sitting this afternoon, is generally regarded as an electronic or digital currency that is issued by largely unknown, unregulated elements using computer codes that are basically meant to encrypt or hide information about both the transactions and the operators. And in a sense, it is money that is created out of thin air. Cryptocurrency is used to describe the activities of players in an electronic dark world, where transactions are extremely opaque, they are black, they are not white, they are not visible, and they are not transparent. Since many Nigerians delved into its usage, we have been studying its development, and paying close attention to occurrences in that space. Now, we know enough at this stage to decide that a continuation of these opaque activities significantly threaten the safety and soundness of our financial system. And like you know, the CBN has a major and primary responsibility as a primary regulator to protect activities of all actors and stakeholders, and particularly uninformed actors in that space in the financial system, from other actors who may wish to take advantage of their lack of or limited knowledge to reap others, the uninformed people off. And that is the reason we have asked all banks to desist, to cease, and indeed desist from operating accounts for cryptocurrency dealers in Nigeria. We have tasked our banking supervision, our payment system, and our IT departments to conduct a thorough investigation into the activities of current exchanges and their major players. The result of the investigation will lead to better understanding of the activities and may be unveiled to all in due course.
It will be futile to ignore the fact that virtual currencies, in particular cryptocurrencies, are not with us. The question is, what is their character, and do regulators have a responsibility? I think the answer is pretty obvious. Regulators have a responsibility. So what is the legal status of cryptocurrencies? The India Supreme Court had cause to look at this issue and came to the conclusion that we don't know what it is. We cannot classify it. And if you cannot classify something, how do you protect those who inevitably will suffer from it, sooner or later? Are they legal tender? Are they assets? If they are assets, they have tax implications. What is the level of their susceptibility to money laundering and terrorist financing? How do you protect citizens? Are they choices in action or securities like stocks, as SEC has said? Are they amenable to Ponzi schemes? What are the law enforcement challenges to tracking them and linking them to corruption? I can say that in ICPC we have a few cases that are actually linked to cryptocurrency. And the major one, we have not found the role player up till now. So why has this suddenly become an issue for us? I think the CBN governor has underscored that fact. I think that we cannot pretend that this is not a challenge. And if many more developed economies are taking measures, we cannot refuse to take measures. Let's take a few pointers. Much recently, cryptocurrencies played an active role in the NSAS protests. Those who made contributions did not want to be opaque. They disclosed themselves, and that was noble of them. But they could have remained in the shadows if they wished. This is an indication that cryptocurrencies can actually easily be used to fund insurgency. That's number one. Number two, we know for a fact that cryptocurrencies lend themselves to use in money laundering. There are people who do business at the moment and only get paid in cryptocurrencies, even in Nigeria. In 2018, while I was still at PACAC, I coordinated a program to look at cryptocurrencies, and this is published, and we brought in a few people who traded only in cryptocurrencies, and we wanted to know why and what were the vulnerabilities.
To understand where we are, this morning, I took is that only last week, together with the central bank from the FIU, we reversed more than $3 million in fraud in this area last week, back to a country. I don't want to mention the country. So this is how bad it is. Then thirdly, there was hardly any violent crime analysis that we did. You heard what the ICPC chairman said. We have the records live. They use it to sponsor violence in Nigeria. So if you like, call it terrorism. If you like, call it kidnapping. If you like, call it whatever it is. We never did complete crime analysis and concluded it without picking a crypto account. So, and in essence, this is just the practical aspect of it. And I said it, whenever we talk about crime, we are the typology analysts. We look at two things. One, vulnerability. Then secondly, we look at the risk. The two are different. If I say the FIU chairman is at risk of being attacked by criminals, but the question is the FIU director vulnerable? Yeah. So being at risk is different from being vulnerable. We have all the people occupying positions here at risk. But are you vulnerable? So you have it in the perspective of the crypto market. It's both vulnerable and risky. We listed about 5 different areas of vulnerability. First, it has an intersection with the existing currency operating in the financial system. There's an intersection. And that intersection is not clearly visible. That's why we advocated, looking at mellowing down cash completely in the economy. Because what is happening is that if you have too much cash stuff, it will go and buy the forex, come back, push demand on your little dollar, and then the next thing, anything can happen. They can hide it in the crypto or do some other things and so on and so forth. So we will look at, as the CBN governor promised, it's a step we are taking at the right time, but we look at far more than that. We have to look at, general working of the financial system sometimes to even arrive at where we want to go.
Prior to this CBN directive, the SEC had, in 2017, cautioned the public on the risks of investing in digital and cryptocurrencies. Indeed, between 2017 and 2018, the CBN, SEC, and NDIC all issued warnings to the public on the lack of protection for investments and deposits relating to cryptocurrencies. However, by 2020, the volume of transactions in the crypto space had significantly increased, with a rise in issuance of initial coin offerings and security tokens. In 2020 alone, Nigeria was reported to be the country with the second largest volume after the USA, and value of bitcoins traded in 2020. Total value of trading in 2020 was reported to be worth over $500 million. In light of the increased volume of reported flows and increased sophistication in investor appetite, the SEC constituted a blockchain and virtual assets framework committee to initiate research and develop a framework to support innovation and regulation within the blockchain and virtual asset space. The CBN identified certain risks, which, if allowed to persist, will threaten investor protection, a key mandate of the SEC, as well as financial system stability, a key mandate of the CBN. It therefore released its directive to the banks, as we all now know. The SEC subsequently published a press release on 11th of February 2021 to provide necessary clarifications on its regulatory position on cryptocurrencies and the status of the implementation of its regulatory incubation framework and fintech plan. Given the CBN's directive, the SEC has now put on hold the admittance of all persons affected by the CBN circular into its regulatory incubation framework.